Okay, good evening, everyone. So this is the continuation of the course outline, and next on the list we have understanding liquidity and the do's and don'ts, right? Understanding liquidity. I'll be explaining this, right? And as I'm talking alongside, I'll be talking about these ones too, the do's and don'ts, right? And under the liquidity, we have understanding fair value gap in particular, which is the aspect we are looking at, understanding fair value gap and then tradable fair value gaps, right? So I've drawn infographics on how to picture how fair value gaps are already. All of these diagrams here, these are infographics on how to understand um, the fair value gap structure. Now, if you look at this thing, you see that there is a rectangle there, right? Let me try to. The rectangle indicates a fair value gap region, right? A fair value gap region. Now, what did you see? Price mitigated on a fair value gap, right? As price mitigated on it, what happened next? We have a slightly structure, something like an SMS, right? You understand better when we go to the chart, but then keep picturing everything here, right? We have something like an SMS, then price just mitigated it and then we bought to the upside, right? We bought to the upside. Same thing here, same thing here. Here, price mitigated the FVG at this point, right? I made it light, the FVG at this point. Price mitigated it and we had change of character there. And after the change of character, what happened next? And after the change of character, you'll be looking to buy a long, you'll be looking to take a long from this minor structure here, right? You'll be looking to buy a long from here. You'll be looking to buy a long from here, right? You'll be looking to buy a long from here. Same thing with this. Same thing with this. You'll be looking to buy a long from here, right? Now there is one thing with this structure. If you look at this one, it hasn't formed like a complete structure that one is going to trade immediately. But then you see structures like this on the charts, right? This is for the buys, and there are other scenarios where a structure will form for an FVG and it's going to be tradable. Price just mitigate the FVG. This is for the sell too. This is for the sell structure. The complete opposite of the buy, right? In terms of directions. Yeah, complete opposite of the buy in terms of directions. And we have our sell here. Now it's not about knowing, it's not about the name, right? It's not about carrying things like FVG, the FVG imbalances, what do they call it again, inefficiencies or IPDA. It's not about carrying all of those big names. It's all about trying to understand what they do, right? How they react in the market. Yeah, knowing the names are actually useful for you to understand what you are trading. But then understanding how those things came about, the terms, how price reacts to them, it's one thing else. So that is what I'm actually concerned about. So here we have a complete opposite structure of the pie, right? And I made this one to break the low because selling using FVGs is very, very risky compared to buying, right? You can get a better buy setup than sales. Sales are really, really much riskier than buys. So this is the opposite of the direction here. Now, okay, quickly let's look at the chart. But then let me show you something here. This is just a complete FVG structure without price. This is just price mitigating FVG, right, for the buy, and price mitigating an FVG for the sell, right? Now, looking at the direct charts, I've already gave some markouts, right? Now, if you look here, FVG serve as a point of interest, a point of entry for you, right? One of the do's, right? You can use FVG to enter the market, right? You can use FVG as a TP region, That is, you can use FVG to set a TP target, right? Knowing that price will mitigate that FVG. So I'm going to set my TP there and price just tap on the FVG and then my TP will hit, right? Now, coming to the chart here, we have a structure like this. We have a structure like this, right? We have a structure like this. Okay, this is a complete, I think this structure here, it's kind of wacko. But then, okay, this is a complete structure here. We have a similar structure here. We have a similar structure here. You saw the points where price mitigated is fair value gap, right? Price mitigated this 4-hour time frame FVG, and there was another block created there, and price will buy from that other block to the upside 1:9, right? You see these entries here. This is just this is another one, right? This is another one here. This is another one. You have price mix. This is like the second one I just showed in there, right? You have price mitigating this FVG, and price created something like a change of character. Price created something like a change of character. You could see it clearly, right? Price created something like, let me remove the magnet. Okay, price created something like a change of character, and then what happened? We return to that, we return to this other block here, right? We return and buy from this other block at this point. Yeah, or any other block, see any other block that mitigates an ever that mitigates a fair value gap, right? Any candlestick that mitigates a fair value gap, majority of the times that candlestick have an 80% of holding strong than a normal other block, like this, right? That candlestick coming from an FVG region has a higher probability of holding than a candlestick that is coming from like the normal order block, right? The one coming from FVG is more stronger based on what I've seen, right? Especially on Solana, optimism, Earth. Yeah, price action changes. So at some point, those price actions will change too. So you need to flow with them. So we have this one here. We have this one here. The fair value gap, the candlestick that mitigated that fair value gap, right? After the change of character, we had an interesting move, right? We had an interesting move, and price mitigated this candlestick. If I go to 1 hour time frame, you see an entry there, like a more better entry, right? You see an entry there. You see an entry there, the last candlestick, the extreme. So let's use the extreme. You see a more better entry at that point, right? The price snipes, and then move to the upside. Now, if you are trading this, you can actually as well set your TP to be this high. Recall when I told you about setting TPs, or you can drag it to an extent that you like. But you saw the reactions there, right? Now let's go back to what again? 4 hour time frame. In the 4 hour time frame, also this is just a pure FVG mitigation. Recall, I'm using line to mark FVG here. You can remove this line and just use rectangle, but I like line because it's more neater for me. Like, you can remove this line now. You can remove this line and use this to replace it, right? But then I like lines, right? I prefer lines. Yeah, I prefer lines. So this is just an FVG mitigation, price mitigating this FVG, then buying to the upside. This is another one. This one, price didn't, you can't find an entry on this one because price didn't provide a clear entry for you, right? Now, this is just a clear FVG mitigation. This is an imbalance here, the price mitigated. You know that FVG can also be called imbalances or inefficiencies. The price mitigated and then started buying to the upside, right? And I think if you go to lower time frame, there should be an entry here, but then it should be risky. But then there will be an entry there. Those two candlesticks that are closed should provide an entry point for someone. Okay, the candlestick that mitigated the FVG was a big one. So if you are taking everything all, you see that price tapped on it. Right, price created something like a change of character on it. A tiny change of character there. Right, price created something like a change of character and then retested on that candlestick, the big one, that big candlestick there. We tested on it, right? Just some resistance and we bought to the upside. But then if you are refined, maybe to this smaller one, that would be a missed entry. But then I'm not interested in this entry type because it has lots of risk since the structure isn't plain and obvious for us. I don't want to trade something that I have to be forcing my eyes on. I want to trade something that is much more clearer, that to carry out decisions should be easier for you, right? So let's go back to 4 hour time frame. Now, another thing is this: if you're trading FVG, it's different from all the charts, right? Every structure have a certain type of every pair has a certain type of structure they respect. Some structures have a different approach of trading them, right? Every structure have a different approach of trading them. Phantom, phantom, phantom respects phantom respects what is the name again? Phantom respects chart patterns, right? Phantom respects chart patterns, right? Solana respects FVGs, other blocks, but more of FVGs. That is what I noticed though. I don't know, eights of recent. And this price action changes at some point. You see price respecting a certain point, let's say FVG, and the next month, you see that same pair that was respecting FVG the previous month. Now it's invalidating every FVG. But I saw this one that like the one I showed you for a sell bias when I was marking those infographics, right? After price mitigated this FVG, right? We had an entry here. That same other block that mitigated it, not this one at the top. This one that becomes a high probability other block to sell from. A high probability other block to sell from, right? To sell from. And you can target this low as your TP. You target this low as your TP. Recall you mustn't have 1:9. Or you can choose to go to lower time frame, let's say 1 hour, to find a better entry if you don't like the kind of entry, the kind of order block there. So you go to a lower time frame and see if you find a nice entry. But there is one thing with refining, you can have a missed entry. You can have a missed entry. Like here now, price didn't tap on this order because if you have to refine, your mind will be telling you to use this last one. And if you use it to be a missed entry, right? So you see that even here, price respected FVG. Price respected fair value gap at this point. Let me mark it out for you. It's tiny. Okay, price didn't even tap on that FVG at all. So you saw that price only respected this whole inefficiencies by filling it up, right? And one more thing, I want you guys to see the video I made on one of my tier programs on fair value gaps inefficiency. Yeah, that video. This video is very, very short because I'm trying to filter a whole lot of things and just show you the main points. But then that video wasn't filtered, and I think we get information from it. So then add it up with this one that I've tried to filter and give you something that it's much better without lots of words here. So see that video on inefficiencies I did last year, yeah, in the Telegram channel. That video has lots of things on FVG, over 4 videos. But this one I'm not intending to make it long because I can filter my words and then make it a very short one. So this is the one I should. This is setup here. A 1:3, right? A 1:3. So let's continue. This is another structure having FVG. Another structure. Price mitigated FVG at this point. This week, I mitigated that FVG. And this other block here becomes valid, right? this other block, that wick or that candlestick that mitigates the FVG becomes valid. You can choose to use it fully. I mean, full candlestick. That is a full candlestick, or use just that point that mitigated the candlestick, right? Use just that point that mitigated the candlestick, or you go to lower time frame, you see a better order block to use. Yeah, so this is just how it is, how it has been playing out on fair value gaps. Like I said, try to see that video on one of CDT programs I did on imbalances, inefficiency. You will see lots of contents there on fair value gaps. Now let's continue. Okay, this chart is already finished. Let me check on Solana. This chart is already finished. We've done things here on every already. Okay, look at this one here. We didn't look at this. Look at this one here. Price mitigated this FVG, right? And I shouldn't be saying we broke structure because something that you need to know that we do. And as price mitigated it, that candlestick that mitigated that FVG was what price sold from, right? Price mitigated it at this point, and then price mitigated it using these 2 weeks, and then we sold to the downside, right? So you see a structure like this in FVG. Let me check Solana. Let me check Solana. Okay, this one on Solana. This one on Solana, right? This one on Solana. This is an FVG. This is an FVG, right? This is an FVG at this point. But now there is something different about the structure. I mean something really different about this structure, this one in particular. Because this structure now, if you look here, price took out this low, this sell side liquidity. Is this sell side advisable? But price took out this low, right? This old low. And after price took it out, what reaction happened? We had our change of character that formed, right? Change of character formed here. Change of character formed here, right? Change of character formed here. Price took out this low recall, right? Change of character formed here. Still inside the FVG that this reaction happened, right? This one equals small waiting inside the FVG, price bought from this point using the wick, right? Price bought from this point, and then your target should be this high. Since price took out this low, right? Price will come for this high. So price will come to take out this high here, and we took out this high. So let's say you are trading this and you understand, I know how to trade range. I don't know how many of you are still trading actively, or how many of you look up to trade actively, but then this is time for you to start figuring things out on the chart, right? So you see how price reacted from this point to this point. Yeah, and this is a crazy ratio, 1:13, a very crazy one here on the chart, right? All these things are liquidity. You see all these weeks here, they are all liquidity. All these weeks here, but then till we reach that liquidity point, right? Another one is this one here. Sorry. Now one is this point here. This is a fair value gap here, just like the one we just did. This is a fair value gap here. This is a fair value gap here, right? We had a change of price at this point. Inside that same fair value gap, right? We had a change of price there, And what happened? Price bought from the other block. You can use it full or you just use it half, right? You know what's best for you. And you know if you want to use it half, you can check lower time frame for a better order block rather than just guessing. Right? Yeah, but then I know that there will be another block lower there. So you saw the structure here. This one happened inside a FVG. So something you shouldn't do about liquidity, right? Don't trade the region when liquidity has not been taken out unless you get taken out, right? Just wait for liquidity to be cleared, like how we clear liquidity from this low here on this change of character before we had an entry. But if you are taking this entry directly, price will take you out, right? So you wait for liquidity to get cleared before you make an entry. Don't think that you're going to trade don't think that FVG trading is about marking FVG and placing your entry there. No, you wait for price to mitigate that entry first, right? Before you carry out your trade. Don't go and place a trade on a plain FVG, something like this. Don't go and mark FVG like this, something open like this, right? Don't mark FVG, something very, very open. Sorry. Don't mark FVG and just put your entry there waiting for something like this since FVG is here now. You go and carry your entry and put there. You carry your entry and put like this. You mark FVG, carry entry and put like no, don't do something like this. You will take a sales a billion times before you even find the one that will play out. So you wait for price to mitigate its first before you find entry. Yeah, that is how you trade the FVG region. You don't trade like this. This one is a no. Right, this is a no. You don't trade like this. Now another structure. Okay, there is a tiny FVG that formed here. A tiny FVG that formed here at this region, right? A tiny FVG that formed here. And what happened? We bought from that week, right? Price mitigated that week, and we bought to the upside. So let's say if we target this thing, was it a TP? I think it's a snipe. It's a snipe, right? Okay. It's either didn't hit TP, but then that is where actually I myself I'll be targeting for TP. Or let's say maybe I see a reverse and I'm just close, but then that is where I'll be targeting for my TP, this high here, right? That high there, that high there. So this is about FVG. This is about FVG. Now, oh my God, my screen just split. Now, so you can go to your charts and then do the same thing for F. Yeah, do the same thing for Ethereum. These are all FVGs. Do the same thing for X, right? Now, and then try to send on 4 hour time frame. Try to see FVGs play mostly very, very well on 4 hour time frame. And for lower time frame trade entries, you need to backtest very, very hard for you to see good entries from lower time frame entries, right? But then on higher time frames, you see them, they are more respected, just like how other blocks are. Other blocks are likely to respect themselves on higher time frame than lower time frame. And for you to get a nice order block from lower time frame, you must have backtested like hell, right? To understand how they flow. So same thing goes with favor lookup. I know that other blocks, how they react changes. This month, you may just be trading other blocks that form like this, boom, and you just make money and you just make money like this. Price just mitigate your entry one time, and you've made money here. And next month you don't see something like this. You start seeing structures like this. Next month maybe you start seeing structures like this. Before price even mitigate your order, before price mitigates your block, price must have taken you out completely, right? Before price goes to the main point. You start seeing complex structures, a more complex structures, right? And then what do you do if you are still waiting for price to mitigate from here for you to buy? Price will take you out, right? So you see that here now it's more of like a structure that first held a sale, right? But then that sale wasn't valid because it was there are more buyers here, more of like an internal change of character that occurred, right? So price bought to the upside, right? Yeah, so that is same thing like a breakout. If I mark it like this, it looks like a breakout and retest. So and the next day maybe you don't see a pattern like this playing out. Maybe you don't see a pattern like this playing out. What you see is something that is just like change of character direct, or you see fair value gap playing out. So market changes with respect to time. Sometimes what you know will stop playing, and then what you know will stop playing, and another thing will start playing out, and you just be full of surprises. These ones are just other blocks. Sometimes fair value gaps will be playing. Sometimes breaker blocks. You just see market doing lots of magic for you. So you need as time goes on, you refine yourself. You go to the charts. So you need to go to the chart, figure out movements on your own, right? Because because I myself I trade, I can teach you all the things I trade, but then I cannot tell you when price is forming them so that you'll be trading alongside with me, because both of us cannot be trading at the same time. You know, I may be busy today, you may be free trading, I may be free tomorrow, you may be busy. So everything I teach you works, right? But then how you see them on the charts depends on the effort you put in and how you've tried to refine what I've taught you to fit your trading style, right? So, and let's say if you had to take a new a fresh trading course, right? Either from me or from someone else, you will see the same thing I've taught you, but then there might be a little difference of refining, this same refining that I'm talking about, right? The other is difference you see refining, and refining will be on maybe price have start changing approach, and you are paying to see a new approach of the market, but then it's going to be exactly the same thing, but then a total refining, right? So refinings are actually cool. So go to your chart and backtest on the price action, the price action on X, how it has been respecting fair value gaps, and then you send it a group. All right, so that will be all for this fair value gap and tradable fair value gap structures. Yeah, so I thought I was going to do much here, but it seems like there is not too much here. So go to your charts and then send me some charts. And then also see that video I talked about imbalances I did. I think was it on CD public channel, right? I don't know which month was that, either August, September, on one of the months here. I don't know, but then you can check it out on the channel and then see that video to add up. Yeah, because everything I've done so far in that Telegram channel and in our mentorship course has lots of value in them. Yeah, so it should be flowing alongside. Yeah, so that'll be all for this, and I'll be sending this video to you right now on the group. Yeah. How am I talking to about? Yeah, so that is all for the fair value gap, right? Not too much complicated, and it's simple. It's very, very simple. It's something that needs more effort from your end, right? You see that you can see I'm spotting them very, very easy. So me being able to identify them so easily is because I've been a master of it. I've been in the charts, seen how they work, traded them, had lots of experiences. So it's time for you to go get those experiences on your own by trying to master them too. Yeah, so all the best in forwarding your learning to this point. Yeah, then that is all. Till our next content. And at the end of the section, tell me what we have next in the group. The end.